Hello everyone, this is Andrew McNair from the SWAN Capital with our September 2024 SWAN report. In this month's video, we're going to discuss some recent headlines that have influenced the financial markets and distill all of this information on what it could mean for your retirement, what it could mean for your portfolio. Now, as always, please stay tuned at the end of this video for some required disclosure statements. At SWAN Capital, our market outlook is cautious because of world conflicts, higher consumer credit, coupled with a slower job market. And that's what we're going to talk a lot about today is the job market. All eyes seem to be on the BLS, the Bureau of Labor Statistics. And so stick in there with me because there's a lot of great information I want to share with you about the jobs report. When the report finally came in, it confirmed that the jobs market is finally rolling over and the economy is beginning to buckle in the face of higher interest rates, as well as deficit spending. Now, is this it? Are we finally going to have the recession that everyone's been predicting for the past 2+ years? To the news media's really frustration, this recession never really happened. Everyone's been looking at their watch, asking, where's this recession? Probably not, but only if the Federal Reserve takes meaningful and effective action. The Fed has been on the fence about cutting rates, and again, many people speculate that they should have done it at the end of July. I believed and have been outspoken that the Fed has done the right thing by keeping it higher for longer. Now, by keeping it higher for longer, now markets are really fretting over economic slowdown, and of course, recession fears are at an all-time high. And that isn't a good place to be. September and October tend to be volatile months, and so far, September has stayed true to that reputation, delivering the worst week since March of 2023. But as bad as that week was, did you think we would be over 5,600 on the S&P 500 at the end of August? I mean, does a 250-point drop to 5,400 change the outlook when we were expecting at the beginning of the year, looking forward to the end of 2024 at 5,000? Are you on track with your goals? I would hope so. I mean, remember, market volatility is normal and nothing on the horizon is causing excessive concern. We will monitor developments and communicate new insights as needed. But here's the thing about the jobs report. Opportunities are drying up. That's the story from the employment data released in September. The JOLTS report for July showed 7.6 million job openings, below the consensus range that was between 7.8 million and 8.2 million. The ADP employment report was also really disappointing. We added only 100,000 private sector jobs when everyone was expecting 140,000 jobs. According to Nella Richardson, ADP's chief economist, the job market's downward drift brought us to slower than normal hiring from the 2 years of outside growth. Then we have the July non-farm payrolls report from the BLS. So given how the week was going, it was unsurprising when this report also missed consensus and all the expectations that the market had. Economists and market watchers were calling for 160,000 jobs to be added, yet 142,000 jobs were added. To state the obvious, the final shoe maybe hasn't dropped, but it is clearly falling. The Fed raised interest rates to tame inflation, which was driven by disrupted supply chains, stimulus payments, and government spending, as well as wage inflation due to a shortage of workers. Well, now that supply chains have been repaired, stimulus payments are all gone, and the large government spending programs such as the American Rescue Plan, the Bipartisan Infrastructure Act, as well as the Inflation Reduction Act are all a thing of the past and all have been used up. The jobs market has hung in there with companies reluctant to reduce their workforce because it was so hard to staff up post-pandemic. Now that the job market is rolling over and we will see if inflation is going to follow suit. Is this the beginning of the approach to the soft landing, or is it something else? Unless you were like maybe Tom Hanks in the movie Castaway and had no communication with the outside world, you likely heard about Nvidia's earnings. It was all the rage. It seemed like the only news out there as we floated through a slow final week of August. Rolling into the Labor Day weekend, In a nutshell, Nvidia's earnings beat expectations, but failed to live up to the unreasonable hype that analysts hoped for. So after being up over $130 per share in the days prior, Nvidia dipped as low as $115 per share, following their earnings announcement before settling back to $120 per share. Now, the Nvidia's volatility has only continued, with shares dipping once again. There's a cautionary tale here, plus a mini and potentially costly lesson in market timing or day trading. The market's advance has been led by just a very narrow set of companies, and we're all enjoying a good year because of those few companies. But people still aren't satisfied, and they're looking for more. Nvidia's up around 150% this year, plus it split 10-for-1 in June, yet for some, it isn't enough. This is why we don't follow or support discussing individual stocks or sectors, but instead concentrating on asset allocation and keeping a long-term focus. So is talking about individual stocks or sectors more exciting? Probably, but it moves a person from acting via logic and discipline to relying more on emotion, taking them from being an investor to being a speculator. It's not much different than just plain old gambling. This month we saw a lot of gambling in the market, and when it was over, we were pretty much where we began after a lot of smoke and noise. Investments should be boring and predictable, especially in your retirement. And the excitement should be reserved for what you do with your investments and how you spend your money, rather than the excitement being caused by your investments. That's just stressing you out that you don't need in retirement, and your doctor would agree with me. That wraps up our market recap for the month of August, and we're going to come back with fresh updates for the next month, especially as we close in on the election season. Now, before I go, I wanted to highlight a couple events that we had the pleasure of hosting this month, and events that we'll organize over the next few weeks. So on September 13th, the SWAN team, along with some very supportive and selfless clients, volunteered at the Dream Center, which is our charity of the year, where we helped out with yard work at the shelter. We also gave out more than 150 meals to the homeless community in Pensacola. We also had a great event for federal employees in Pensacola, what we call our ProFeds events that we do 4 times a year. So if you know a federal employee and want to invite them to our next ProFeds event, be sure to do it now, because those events fill up so quickly. Now, on October 5th, we will be having our annual luau party. This event is by far our biggest client event, with a few surprises always scattered throughout the evening. While this party is reserved for clients who RSVP'd, so be sure to RSVP ASAP. Now, we will be hosting a bunch of live events throughout the community. For example, we have Jesse's in Magnolia Springs on October 8th and October 10th. If you know a soon-to-be retiree that's your neighbor, a fellow coworker, a family member that you want to invite and join them at that event, be sure to RSVP ASAP so you can reserve your seat. So don't miss out on that opportunity to talk with me or the SWAN team, and understand that we would love to have you bring someone to one of those events. We'd love to make an opening available. Now, please, if you have questions about your personal financial situation, you have questions about your 401k allocations, don't hesitate right now to get reallocated with your 401k allocations, or call or email us with any of your questions that concerns you about your portfolio. But I want to tell you that this is it for this month's SWAN Report, and I want to thank you for listening every month to our SWAN recap. Our team works really hard in producing this, and we are appreciative that all of you listen to it so attentively. But please remember that nothing we talk about here is a recommendation. If you're looking for recommendations about your personal financial situation, all you have to do is give us a call at 1-800-848-8768, or click the link below to schedule a visit, or you can shoot us an email at info@swan-capital.com. Again, thank you for watching this month's market recap, and we'll see you next month.